Hi there, welcome to Kneppy Invests. Second ad hoc video in a row for me yesterday. It was all about A2 Milk and rumours of a takeover from Nestle in regards to that company. Saw the share price rise 12% in one day. Today, it's all about AVA Group, a company I've been holding for quite a while. And it's a pretty big bagger for me, about a 4 or 5 bagger. Today, AVA Group have announced they'll be selling one of their divisions or divesting one of the divisions. It has been rumoured for quite a while that this is a possibility. Now, with the money they're getting from the sale of this services division, this company is going to be cashed up to the max. $60 million of cash. So right now they have $17 million of cash. And from this sale, they'll be getting $42 million. So $60 million of cash. And the market cap of AVA Group right now is about $100 million. So the enterprise value of AVA Group will be at $40 million. And even though they'll be selling out probably the most reliable, dependable division of the company, the other division, which is the technology division, is a little bit more lumpy, but it has the higher margins. And the management have described their services division as non-core and their technology division as the core part of this business. So management want to concentrate on the core part. And that's what they're going to be doing with this sale of their services division. The main question I have moving forward with AVA Group and their management is what are they going to do with the $60 million of cash moving forward? They have some very important decisions to make. In fact, I think capital allocation, what management does with the money they have, is the most important decision they do on a daily basis, even a monthly, weekly basis. So it's going to be very interesting to see what answers they have for shareholders over the next month or so. Before I look into the details of this divestment of the services group, just a few facts in regards to AVA Group. They do have two divisions, technology division, which comprises of Future Fibre Technologies and BQT Solutions. They do consider that their core division. That is where the higher margins of the business are. And their services division is called AVA Global Logistics. Again, lower margins, but that services or that division is much more reliable. And during the COVID-19 pandemic, we really haven't seen that division being affected. In fact, that division have grown over the past 18 months. And we have seen the technology division being impacted and affected by the COVID-19 and lockdowns around the world. It does look like it might be recovering based off the July update from the company. But I think there is potential that management are confident that their technologies division have come out from the pandemic looking pretty good. And I think they're very confident on Aura IQ. And I'll talk about that towards the end of the video. Just a few financial facts in regards to AVA Group, and most of these facts prior to the announcement of this divestment of the services group. Tick code of AVA Group is AVA, of course. The market cap, just before they released this announcement on the morning of the 17th of August, $101 million. That was at 43 cents. The share price actually did take off a little bit during the morning on the news of this divestment, went up to 48 cents. And then during the day, as the rest of the market sold off, we did see AVA Group pull back to 44 cents. So even though the market was down about 1.1% today, AVA Group actually did rise in share price today. Revenue in the financial year 21, they did give some guidance in regards to revenue for this financial year in their July update, 65 million. EBITDA, the trailing 12 months, so that's up until the end of December 2020, 17.4 million. Net cash, 17 million. That was up 6 million from May, so that was based off their July update as well. You look at some valuation metrics or ratios in regards to AVA Group, and they're all looking really low. So this company, based off valuation, is very attractive right now, and that's even before this divestment, and is also true after divestment as well. So EV to EBITDA 4.8 and the PE ratio 6.5. Now on to the important details of the divestment of the services division that is AVA Global. They sold it for $63.1 million That's Australian dollars. Not all of that is going to the company because they will be giving bonuses, incentives to AVA Global employees, which amount to something like 15 or 16 million United States dollars or US dollars. And the rest of it, 42.4 million Australian dollars, will be coming to the business and being put into the coffers of AVA Group. And for a company with a markup of $100 million, that's a lot of cash coming into the business. The price they did sell AVA Global for 5 times EBITDA, and that's EBITDA is based off their forecast EBITDA in the guidance or trading update they released in July, is neither too high or too low. That's a fair value for a company. So if I was selling AVA Global and I got that price, I'd be happy. And if I was buying it and I got that price, I'd be happy as well. Now, in their announcement of this sale, they did give us 7 pages of commentary, some charts, and a few tables in it. I've just included one of the tables here. It's just comparing the two technology or the two parts or components of the technology division and just comparing the assets, revenue, EBITDA, and net profit before tax, and comparing that to AVA Global. And I just wanted to include this because if you look at the numbers in that table, you can see that AVA Global has the lower margins and the two technology components have the higher margins. You can just compare the revenue. AVA Global had $18.4 million of revenue. Compare that to the technology divisions had about 16.5 million. But the majority of EBITDA and profit before tax in the overall group was mostly in the technologies division. So they're just showing you that management have decided to sell out of the lower margin part of the business and maintain the higher margin, even though the higher margin technology division is a little bit less reliable at this point in time than the AVA Global or Services division. The next thing I wanted to do was just look at the financial state of the company after the sale of the services division. So all these numbers I've calculated are based off what the company might be looking at by October or late October when they do officially sell the services division. Enterprise value 42 million, that's at 43 cents. Who knows what the share price will be in a few months, 2 or 3 months. Revenue 24.7 million. We know that because that's the number they've already given us. They've also given us a bit of guidance when it comes to EBITDA between 7.3 and 8 million. So we do know quite a few numbers here in regards to the new looking company come October. The main thing here, actually there's 2 main things here. The net cash is still really high at 59 million. And when you compare that to the market cap of the company and the fact that the technology division is still profitable and generating a bit of cash, that is showing us there is still some good value here, even though the risk has increased. And when I calculated some valuation metrics, the EV to EBITDA and PE ratio, those are still really low as well. So even though the risk has increased, there is still some good value. And if this company can succeed in the technology division, growing those divisions over the next few years, and I am quite positive in regards to Aura IQ, bringing some, quite good cash flow into this company within the next 2 to 3 years, I do think even at these prices, AVA Group is looking quite attractive. But in the end, the success of this sale of the service division is really going to depend on what management do with that $60 million. And in fact, capital allocation is one of the most important roles of management of any company there is. So what they do with that money, that $60 million, is how I will eventually judge the performance of the management and how I will judge the success of this sale. Hopefully, when the company releases their full year results, management will give us some idea what their plans are in dealing with that $60 million. And that is a very important decision the management of this company have to make in the future. And there are 4 main paths they can choose to go down. Now, they don't have to go down one path solely. They can choose a combination of these paths. But I do have my own personal preference about what path I believe they should take. And it's definitely not 1 or 2. I think if they go down path number 1 and give us special dividends, especially if it's a really big special dividend, I think that shows me that the company management are bereft of ideas of how to grow this company in the future, and the growth potential of this company has come to an end. And more than likely, I will sell out of this company if they give a pretty big special dividend. I wouldn't mind a little special dividend, but not a big one. The second one is a little bit different, a share buyback. Now, I do believe the valuation of this company is quite low, and that's the best time to do a share buyback is when the company's valuation is really low. If I remember correctly, Commonwealth Bank is doing a share buyback right now, and that's a complete mistake because the valuation of Commonwealth Bank right now is actually elevated. It's higher than it usually is, and that's the wrong time to do a share buyback. That's just my opinion. I would prefer the company to be thinking about acquisitions, and maybe they've already thought about a few acquisitions that would be beneficial for the shareholders in the company in the future. Or another path they can go down is capital expenditure for growth, not maintenance sort of capital expenditure. So I would prefer management go down roads or paths number 3 or 4. Special dividend, a very small special dividend, wouldn't be that bad, but a large special dividend, I think, would be showing me that this company will not be growing in the future. And a share buyback, possibly simply because the valuation of this company is really low, and it's the best time to do a share buyback at that point in time. What are my opinions and thoughts on this sale? Now, I do think this divestment of the services division does increase the risk simply because the services division has been performing better than the technologies division over the past 18 months. And it was stable, the performance was stable and reliable. It was growing. And I was fairly comfortable with the performance of AVA Group simply because of their service division. But this does lead to a question that there is a possibility that management were thinking that the performance of the service division was going to be leveling off over the next few years, and they could be selling the service division at the top. And the best time to sell something is when it has been performing really well and it's at the top of the cycle. And there is potential management have done that, but we won't know because we won't know how that service division will perform once it's sold. Another question is the possibility that management are highly confident on the success of Aura IQ, which is their conveyor belt health monitoring system. It's in trial right now, and I do think they believe that in the next year, 2 years, a lot of cash will be coming in because of the Aura IQ. I don't think AVA Group overall success will be dependent on Aura IQ. However, if Aura IQ is a raging success, and I do believe there is significant upside in regards to Aura IQ, if Aura IQ is a raging success, more than likely AVA Group's valuation will be significantly higher than it is now. But the main question I have moving forward for AVA Group is what management is going to do with that extra $60 million of cash. And overall, how I judge this sale and management's performance is that single question. That's all I have for this little bit of an update to AVA Group and the sale of their service division. If you have any questions in regards to this company or any other company on the ASX, maybe you have some extra insight that I haven't given in this video, I'd love to hear from you because even though I'm doing these videos, I am learning a lot from comments I read on some of my videos. So I'd love to hear your thoughts or your opinions. So leave it in the comment section and I'll have a read of it later. The other thing I should say is I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.